All right, excellent. Well, welcome to the Penny Advisory Council meeting. I'm calling the meeting to order. I'm Karen Groh, the the interim council chair. And I'd like to just go over the conference call etiquette, please. If you could please mute your line if you are not speaking, identify yourself and your organization before you speak. If you are on a phone and logged on through the web, please turn off your computer speaker so we don't get feedback. Please press 6 to unmute your line, and the chat is reserved for council members. All right, I'm going to go through roll call to make sure that I haven't missed anybody. I see Joshua Brooker is on. Is that correct?
Yes, ma'am.
Is Gloria Velasquez on? Oh, yes, I do see you in there. Yep. Jolene Calla?
I'm here.
Robin Rothermel? Okay. Louis Hayes?
Yep,
Louis,
I'm
sorry,
here.
Hayes. Do we have somebody as a representative from the Senate, President Pro Tempore? Do we have a representative from the Speaker of the House as a consumer representative?
No, those two positions are not currently filled.
They're not filled. Okay. All right. I wasn't sure whether somebody had been appointed yet. Okay. I'd like to move on to the previous meetings minutes. If you've had them sent to you in advance, and if you've had a chance to take a look through them, I will accept a motion to approve as true, correct, and accurate the minutes recording the events, actions, and details of the June 2nd, 2023 public meetings of the Pennsylvania Health Insurance Exchange Authority Advisory Council. Do I have a motion?
I am happy to motion.
Was that Joshua?
I'll
Yes,
second
ma'am.
it.
Okay. And a second?
Gloria Velasquez.
Thank you. Any further discussion on the minutes as presented? All in favor of accepting the minutes as presented, please indicate by saying aye.
Aye.
Any
Aye.
opposed? Sorry, jumped on that. Any opposed? The minutes pass. Thank you. This is the opportunity for public comment. So if there is any public comment at this time? Okay. I will move on to administrative matters and call on Devin.
Thank you, Karen, and thank you all for joining us today. Just a couple of updates that we wanted to provide before we get into some of the details. First, wanted to welcome Josh Brooker as a new member of the Advisory Council. At our last meeting in June, Deb Wilkinson had shared how she was taking on different roles and also not continuing her role with the Advisory Council. So her organization has now appointed Josh Brooker to be their representative. So welcome, Josh, to the Advisory Council, and we're very happy to have you here today.
Thank you very much.
And also we have Louise Hayes, who has indicated that she will be also moving on from the Advisory Council. And she was appointed through the governor's office when Penny was first starting and has served in that term over the last 4 years, I believe, or 3.5 years. So I just wanted to say thank you, Louise, for all of your support of Penny in those early years. And, you know, I was not here directly, but really, you know, have heard about really the important role that all of you played during that time in starting Penny up and continue to play. But wanted to thank you for taking the time and the effort and the energy to provide your contributions to the Advisory Council throughout this first term. So thank you very much. And we will be looking to have that, as you've indicated, you know, not having interest in continuing, we will be having your seat filled as well, and we're working on that. So we will have a new member hopefully early next year, but really wanted to thank you, Louise, for all of your support and ideas and contributions over the past several years.
Thank you. It's been a pleasure.
Thank you. And moving on to the Medicaid unwinding report. Devin, you're up again.
Sure. So when we last met in June, we had just started to get through some of the volumes that were coming over from Medicaid as they were conducting their renewals. As I'm sure many of you are familiar, there has been an effort underway at Medicaid to redetermine everyone's eligibility. And the expectation is that there are a really high volume of individuals across Pennsylvania who are no longer eligible for Medicaid. Since the rule that allowed Medicaid to keep them on was changed with the official ending of the public health emergency for COVID. So we have seen a very steady enrollment ever since that activity really picked up a little bit in April and then especially full steam in May. And we've been working very closely with the Department of Human Services on making sure that the communications, the systems, and all of that are aligned. So we did want to share some of our data points. We walked through some of this in June with some preliminary numbers, but we have many more months of numbers now. So we wanted to share some of that with you. And of course, if there's any questions or any observations or anything you're hearing from all of your different perspectives on how the unwinding is going, we are always open and welcome and encouraging of that feedback. So first, to walk us through some of the data and the trends that we have, I'm going to turn it over to Ben Trask, our Director of IT and Master of our Data.
Master of data might be a little bit of an exaggeration, but I am happy to present. So first up here, this is kind of a little bit busy. There's a lot of different things going on here. Let me just point out a couple things. Top right there, we average about 130 people who enroll every day that are connected to unwinding. That is since the unwinding began on 4/1. At the very, very beginning, right on 4/1, it was really a slow uptake. But now, we have enough months of data now that, that's a pretty steady number, and it maybe goes up a little bit, but it's pretty steady at that 130 per day. The other thing I'd like to highlight is the conversion rate column you see in the table on the left. So April is pretty much closed, right? Because, they had 120 days to come in. Their 120-day period has expired, so that's pretty much closed. Same thing with May. But what you'll see is that conversion rate does tend to tail off that 15% when we get down to September, October, November. Those are the folks who are still in play now, still, working towards getting enrolled now. It has been fairly consistent, though, that 15% is kind of like where each monthly cohort is going to top off. So that's basically saying that 15% of the applicants that we receive who connect themselves either manually or are connected to the unwinding because we get them direct from Medicaid, about 15% of those applicants are enrolling. And you can see the details there on the left. I see a question, Louise.
Do you have a sense of how this compares to other states? All of which are dealing with the unwinding. Is this kind of 15% number typical? Of course, I sure would like to see that number higher.
So, Devin, did you want to take it, or did you want me to?
Sure, yeah, I can start us off. I think what we're seeing is, especially with state-based marketplaces, comparing state to state is very difficult because we all have different approaches. So we see some states who are only really looking at the number of people who come in and take an action and how many of them enroll, and they're seeing much higher conversion rates. When you look at people who come in and take an action, about 50%, more than 50% are enrolling. Pennsylvania is a little bit different because we took an extra step, and it's highlighted in this box at the lower right-hand corner, where we take the applications, and for nearly 80% of those applications, those account transfers for Medicaid, we submit that application on behalf of the consumer, and we provide them with an eligibility determination. No other states are really doing that, and so the numbers end up skewing because we count people in this number, the 15% is sort of those people that we've sent in an application for and we've received an account transfer for. And other states that have varying levels are either integrated with their Medicaid system, so their numbers tend to be different. And the integrated systems tend to have numbers that are a little higher, but then there's different numbers being counted of sort of who's applying, whether they're taking action, And so that state to state comparison is actually really difficult.
I second that.
Got it. What's your sense of why this number isn't higher here?
Yeah, I mean, I think the other point I'll make is that this number does look low, and we always want it to be higher because we do think, and we know, some people coming off of Medicaid might have other coverage and not actually need Penny, but we do believe that there are more than who's enrolled who do need coverage, and that we are concerned that they're becoming uninsured. Noting separately, though, that 15% is actually a high watermark for Penny itself, and in comparison to where a lot of exchanges happen in the past. So, for example, at the federal marketplace, they're typically looking at under 10% conversion rates, and historically that number's been 3 or 5%. It hasn't been, to start with, a highly successful, rate of people losing Medicaid and coming into exchanges. And there can be a lot of reasons for that. And there's a lot of people trying to figure out the reasons for that. So I will say that 15% compared to where even Penny was before starting this auto eligibility process, where it sort of takes steps out for consumers. They don't have to put the information in again. When we're able to do automatic eligibility, it means that application is fully populated with all of their information. So we're really taking that whole step out for them when they come over. And we saw an increase from, I think it was around 8 or 9% to 12% just by doing that. And that was last year. The volumes were lower before unwinding. And now that we have unwinding and all the other efforts we've been making with outreach, we've seen this go up to 15%. So that just provides some context for this number is higher than it has been historically. And when you compare it to sort of where the federal marketplace has been historically, but we, of course, are concerned that it is still not capturing everyone, and there is still work to do.
That's super helpful. Thank you so much. And I really do appreciate the outreach you're doing now, the work you did to get that full automation. This stuff is hard, and you've clearly been doing hard work to boost those numbers, and appreciate it.
So Josh, I see you have your hand up.
Yeah, so I put some questions in the chat, but I guess my understanding of the mechanics, and please tell me if I'm off base, is that ultimately when there is a redetermination that the consumer is no longer eligible, they're being routed to the marketplace. And Penny is, like was said, submitting an application to at least get them in the system. And at the federal level, what I was looking at prior to the unwinding, we had 2 years of meeting with CMS where they were talking about this, was that 18 million people were going to be disenrolled from the Medicaid. About 1 million would be enrolled in the marketplace plan. So if that's the scenario, 1 in 18 would essentially be looking for coverage. Is it fair to assume that the 15%, the other 85% could very well be children that are routed to a Penny application that are then CHIP eligible, Medicare beneficiaries that would be on Medicare at that point, individuals that are routed to Penny but enroll in coverage through an employer? Are there any? So one, am I off base in assuming that that's what is happening? That obviously we don't want an 85% uninsured rate. And 2, are we capturing any kind of feedback from consumers about why they're not enrolling in Penny?
Yeah, those certainly are the questions that we've been wrestling with as well. We do think that some people have employer coverage at this point, or potentially they've aged into Medicare. We actually have seen, and you'll see this in the data, we have seen a bit of young adult enrollment, assuming they're sort of aging out of Medicaid, but were not removed at that time. So we are, seeing some activity from 19, 20 21-year-olds coming into Penny. So I do think it's fair to say that 85% are not uninsured. The difficult aspect is knowing what is it half, is it half and half of coverage, half are going uninsured. And that, we talk with the Department of Human Services, and I think the challenging question, not only in Pennsylvania, but in other states and at the federal level, is that there isn't great data on exactly who these people who are not taking any action, what their story is, whether they're already insured and don't need it, whether they're going uninsured, whether they, the kids are potentially covered through CHIP. I mean, we typically have that information. So it is a challenge that not only we are facing, but it's sort of everyone across is trying to figure out about who are the other 85% and whether they have coverage or not.
Is it within either Department of Human Services or Penny's blueprint? Is there any plan to send out a survey to get that data? And obviously it's not going to be complete, but if we can get a large enough, statistically large enough a group of respondents, we can at least see what is going on behind the scenes.
Yes, we are actually working. Yeah, it's a great question. And we've been thinking similar thoughts. We are developing a survey for consumers who did not enroll for a couple of reasons. And one of them is we'll get into later in this discussion around trying to understand the impact of affordability on people not enrolling as well. But I think trying to understand whether people already have coverage and just didn't need it, and that's why they didn't enroll, or if it's something like they took a look, but we're not able to afford one of the plans through Penny. So we are working on that and planning to try to get that type of feedback. We've not put that out out to consumers yet. That is something that we have under work. So
thank you.
I wanted to make a comment that the scenarios that we're encountering are like the families that the children now go to CHIP, but then the family has to pay CHIP and that cost. And then now they're worried about themselves as an adult, what their cost is going to be. So they're making sacrifices to have the children have insurance and maybe not per se the adults of the family. So just wanted to give that feedback that that's also scenarios we're seeing during the enrollment period.
So, and just to touch on two other things that I think were mentioned between comments and between what Devin said. If a person is old enough, if they've reached the level where they can qualify for Medicare, those folks do not get sent to us. DHS does recognize their age and does send them to the, take the appropriate actions. They don't send them over to us. So there shouldn't be, there's probably a couple, but there's not too many people in that group who would be Medicare eligible. And then also on the CHIP side, keeping in mind that here in Pennsylvania, just recently, CHIP and Medicare are now all adjudicated out of the same system. So the eligibility determinations are all made out of the same system, Encompass. So those kids who, qualify for 100% CHIP, are getting that option from DHS, when or if they lose Medicaid. So just putting that out there so everybody, understands those things as well. Any other questions on this data? If it's any consolation, we've thought of many of the same things already. We've heard of many of the same things from other stakeholders that you guys have brought up. It's front of mind for everybody and things we're actively working on. Okay, no more questions. Next slide, please. So the next couple slides are going to just delve into kind of the demographic kind of questions about who, who is part of this unwinding population. This first one is just showing us where the population centers are, where the most applicants are. No real shock to think that, most of the applicants are in the greater Pittsburgh and greater Philadelphia areas, but that's what you're seeing there. Next slide. This slide is interesting. It goes to how much are people spending for their Penny coverage. So bar chart on the left has two bars. The bar on the left shows the entire exchange population, basically showing you that, The average premium is $619, but after accounting for APTC, the average person is paying $188 a month. On the right side of that same chart, you'll see it's significantly less for those folks attached to the unwinding. The premium is less, but after accounting for APTC, they're spending about $88 a month. However, I want to caution that the majority of people are paying way less than $88 a month, and that's where this little table on the right-hand side comes from. Again, it's total enrollees is across the entire exchange. Unwind enrollees are just those connected to the unwinding. And you'll see there, it's showing us that 25% of the people connected to the unwinding are paying $1 or less, and more than half the people pay less than $50. And so, that's a little bit more indicative or more illustrative, if you will, of, that the unwinding population is paying, less than $50 a month, even though, the graph on the right shows it a little differently. If you want to go into the details of why, I'm happy to, but basically it's because we have a few people who pay a whole lot of money, and that skews the average, because what you see on the left there is just a pure average. So if somebody's paying a whole lot of money, that really skews the average. So that's why we try to use those figures on the right-hand side to really illustrate how much people are paying. Any questions on that? Josh, to your point about the metal levels, we're going to get to that in one of the next couple slides. So I'll just hold off on that for a second. Next slide, please. So this first slide is just showing what kind of financial assistance people are eligible for. And you can see, again, the right-hand column, unwind enrollees. If you add the first two together, that's 96% of people are eligible for APTC of some type. And about 3/4 of them are also eligible for CSR savings, should they choose the proper plan. Next slide. Breakdown of the FPL levels. You can draw, some different conclusions here, but I think the majority of the people are in the, less than 250% category here. Like 76 or 77%, are less than 250% FPL. And then next slide, please. Here we finally got to the metal levels. So really what we're seeing here is a lot of gold and silver participation, kind of a little bit at a higher rate than what we see across the rest of the exchange. And, I don't know if we've really asked people exactly why they choose the metal levels that they do, but I think people have more APTC dollars available to them, generally speaking, when they're part of the unwinding population. And so they can, use those dollars to, to get at some higher premium plans. But also people from the unwinding are also very, very, or a lot of them, as we saw from the previous slide, are eligible for CSRs. So that drives people into those silver plans, because you can only take advantage of those CSR benefits at the silver plan level. Any questions there? Josh, did that kind of get to what you were looking at?
Yeah, so it does make more sense. Originally, when I was looking at the other slide, it looks like the unwinding population is spending less at a gross rate. And again, to your point, the majority of the individuals from the prior slide that not only are CSR eligible, but are really under that 200% FPL cohort, they're getting 87 to 94% of the CSR levels. They're going to enroll on silver, whereas consumers that are in the other cohort that are spending more on plans tend to get gold plans that are going to be more expensive because they have the additional cash flow. So that does add up a little bit more in my head as to what's going on. I just want to make sure I look at the gross level. I want to make sure that we aren't having individuals that are rolled off of Medicaid where they're getting $1 and $3 copays to then enroll in bronze plans where they can't afford the out-of-pocket maximum, they can't afford the deductible. So this makes me feel a little bit better.
If it's any consolation, making sure that consumers are purchasing the right plans, getting the most bang for their buck, if you will, is definitely something that we at the Exchange talk about all the time, and definitely are looking into ways to make sure that customers are selecting the right plans through a variety of methods. And I'm sure that you'll see that represented in some of the future plan slides later. All right, if we can jump to the next slide. We only have 3 left. They're really basic demographic information, age on this one, and then gender and ethnicity. Not a huge bit of information to pull from any of them. On the age slide, I will say that it does tend to look like consumers are younger in the unwind population than they are in our regular population. The first step is people think, oh, well, shouldn't all those people be involved in CHIP? And just to head off that question, we've seen it before, we've heard it before. We work with DHS. We are in communication with them to make sure that the folks that belong in CHIP are staying in CHIP before they get to us, and those folks that do come to us, are the people who should be coming to us. It is something we pay attention to, just in case anybody was going to have that question. I'll head it off before you ask it. Any questions on age? Next slide, please. Here's gender. Again, we've noticed it's a little bit more skewed towards females in the unwinding population. I don't know if there's really anything we draw from that, but that's what we're seeing. And then the next slide, please. This will be ethnicity. And we get some better numbers here. It seems like more people are responsive to answering the ethnicity questions when they come from the unwind. I guess that's indicative of they're providing that information to Medicaid a little bit more frequently than they're giving it to us. So that's what we're seeing there. Any questions on any of that stuff or any other data related questions? Louise.
I'm just wondering if you're getting the ethnicity information directly from DHS, which would help explain that.
We do.
Yeah.
We do get that direct from DHS.
Got it, thanks.
Okay, excellent. Devin, I'll pass it back over to you.
Great, thank you. So we recently have been, kind of always scanning for different consumer-focused policies we can undertake. And just to highlight a couple that, more on the operational and website side, and then we wanted to talk about some that we've been considering and have recently had approved from the board, and then also some that we're looking forward to moving forward to get some feedback on. But just to highlight a couple of things that we've done, we have been working across the board on kind of simplifying language and plain language and trying to make sure that the terms we're using on our website when we're explaining different steps to consumers doesn't require a prior knowledge and experience with the insurance industry. So really trying to make sure that the language is clear, from the beginning. For example, there was one page sort of going into our savings calculator that had, probably 8 or 9 paragraphs of text. We kind of shortened that down right to 2 paragraphs to try to make sure that it's something that would have a higher chance of people reading and kind of understanding before moving into getting their estimate. On our website, our homepage, we added a tool that allows people to translate into a lot of different languages and also allows for different, reading comprehension or reading limitations that some people have, like dyslexia, and there's sort of different ways that the spacing of the words and the font use can help people with different visual impairments. So we've made that change as well to try to, just make adjustments for people with different scenarios. So those are a couple of the things that we consider more low-hanging fruit, where we're trying to kind of just always look at usability and where people might get hung up on language or different languages. So we've been doing that, and we're going to continue doing that. If there's anything that you've seen throughout your experiences or perspectives that you'd like to feed into that, we're always taking suggestions on different adjustments we can make. So just wanted to mention a few of those sort of smaller, quick things we've done. And then we also have some broader policies that we've been focused on and looking at. So I'm going to turn it over to David Thompson, our policy director, to walk through some of those recent changes and then a couple of the ones that we're eyeing moving forward.
Thank you, Devin. So a couple of things that we got passed by our board of directors last month. As Devin talked about, we're always looking, especially, and Ben discussed, we're always looking for opportunities to reduce the administrative barriers that folks have to get into coverage. And part of that is definitely helping to make sure that people understand exactly the benefits that are available to them, understand the notices, understand the website. From a policy perspective, the 2024 Notice of Benefit and Payment Parameters gave states the opportunity to do a couple of policy changes to our special enrollment periods. One of those is to provide an earlier coverage effective date for those who report losing minimum essential coverage. So that could be Medicaid or CHIP, employer-sponsored coverage, TRICARE, any of those other forms of comprehensive coverage. When they report a mid-month coverage end date and enroll in a penny plan in the month prior to their mid-month end date. So this would give so currently people who report a mid-month end date of coverage are not able to effectuate their coverage onto Penny until the first of the next month. This creates a gap, a small coverage gap, but one that can be significant for folks that is not of their own making. So we have taken this state option to provide for an earlier effective date, which would be the first of the month within the month that individuals are losing coverage. So for instance, if someone reports that they're losing employer-sponsored coverage on May 23rd, and they come into Penny and enroll in a Penny plan by the end of April, they'll be eligible for a May 1 effective date. Any questions on that? Next slide, please.
When does that, you said it's coming spring of 2024?
Yes, so we are implementing this in our next major release, which will come at the end of March.
Okay, so this is similar to ARP, where there was that major update and then it applied starting in May or June at that point moving forward?
Yeah, in the sense that we just had our most significant release of this past year, prior to open enrollment. We tried to, without getting too technical, we tried to add kind of significant changes to our system to the significant releases that we have throughout the year. So the next one is at the end of March. So this is when that's coming into effect. It's also, I'll talk about this more with the next one. It also coincides with the official end of the Pennsylvania unwinding program. So this will kind of help us continue to transition away from the unwinding and into a more business as usual scenario.
Thank you, David.
Next slide. So similar, this was we also took the state option to approve a special rule for those losing Medicaid or CHIP coverage. So currently, as you no doubt know, during Pennsylvania's Medicaid unwinding period, those losing Medicaid or CHIP have a 120-day special enrollment period to come into Penny and shop. And then we had that 60-day, first 60 days of that special enrollment period. They have a retroactive coverage option effective the first of the month following their loss of coverage. Prior to this kind of special rule, we were we were going to just revert back to the normal 60-day special enrollment period as we have for all of our other ones, without the retroactive coverage option. The NBPP provided states with the opportunity to instead create a permanent 90-day special enrollment period for those losing Medicaid or CHIP rather than 60 days. We have taken that option, and it also coincides with the length of the Medicaid reconsideration period that people have to have their Medicaid reopened in Pennsylvania. So, and this is also the same for CHIP. So this will help us gain alignment with Medicaid and CHIP to ensure that someone losing Medicaid or CHIP, they have the opportunity to avail themselves of all their opportunities to get back into those sources of coverage while still having the time that they need to enroll in Penny should they no longer be eligible.
Is the retroactive opportunity ending at when this 120 days SEP ends, or will there be any opportunity for retroactive coverage ongoing?
The retroactive coverage at this point will be ending after the unwinding. We only had that approved for the duration of the unwinding period, which again is scheduled for the end at the end of March. And then this new policy would go into effect on April 1st.
In the last board meeting, there was discussion around that as well, and the insurers indicated that they were going to go look at the retroactive behavior they've seen so far and see if, it has caused any issues, or they do see sort of differences in people who do retroactive coverage versus the prospective coverage. So I think, that I don't want to say that is likely that we'll be able to get retroactive, but I think there's a sort of an opening there to kind of see based on feedback of how that's been working so far. I think if the data shows that, it's not sort of causing disparate claims or things like that, people aren't only taking advantage of that option to get retroactive coverage for healthcare needs, for example, which is the perspective of the insurance companies, that is the risk with retroactive. I think that might, open the door to further discussion on retroactive, but at this point, there was, wasn't a comfort level with continuing that retroactive policy, but I think there will hopefully be we're hoping for more discussion on that with the insurers and others. And if, there are sort of strong thoughts from this group, we, of course, that helps as well to weigh in on that. We definitely see the value of retroactive coverage. I'll note as well, we do see a lot of people, although we have the 120-day enrollment period, we see most of the enrollment actually happening within a couple weeks of people losing their Medicaid coverage, and the vast majority of enrollments happening within those first 30 days. So we do think consumers are taking quick action, but there are timing considerations with the account transfers and when those come over. So, we think people are acting pretty quickly and within reason of when they're losing coverage. So we certainly see the benefit, and that is a discussion that, again, we hope will continue to be able to have.
Great, thank you.
Any other questions on any of these policies? I will mention that we continue to look for opportunities to reduce the administrative burden of data matching issues. We're also providing opportunities for folks to be reinstated if adverse action has been taken on them. That's been in place since the end of June. So we continue to look for opportunities to reduce the administrative burden that folks have to enroll in coverage and stay covered. Next slide, please. So the main thing we wanted to, from the policy perspective, to discuss today is to kind of continue from the conversation that we had during the unwinding section. One of Penny's missions is to improve the accessibility and affordability of coverage to the individual market and to reduce the number of Pennsylvanians who are uninsured. Pennsylvania's uninsured rate continues to remain above 5%. and cost is still cited as a primary reason why people elect not to enroll in penny coverage. That is even more true for the unwinding population. And even though they have, on net have a much lower average net premium than other enrollees, we know that, sometimes a premium of just $10 can be prohibitive for people to enroll in coverage. So we continue to look for opportunities and are seeking feedback on possible new initiatives to help make coverage more affordable through a state affordability assistance program. A couple of things that we have done some analysis on and want to get kind of some feedback from you all is the desire for a state affordability assistance program that would either reduce the cost of monthly premiums or a potential cost sharing wrap at the state level that would reduce cost sharing for healthcare services. So wanted to this is affordability is something that we are very focused on. We really feel like we've maximized the runway that we have in terms of getting folks enrolled with the enhanced federal subsidies from the American Rescue Plan. And we're looking at opportunities to engage in this conversation at the state level.
I think affordability initiatives would be amazing. Don't have great ideas, but we would totally support that. Wondered about your last sentence when you say we've maximized opportunities. I get that affordability is the primary reason for that uninsured rate. I do wonder whether there are still folks who don't know about Penny and haven't tried, and which I know that you guys have focused on. Wondering about the success of the Path to Penny initiative, which I think was put in place. And forgive me for not having paid enough attention to that. Was that successful? Are there is outreach still? Is there more to be gotten out of that, hoeing that row or whatever the metaphor is here? And as I say, affordability assistance, I think, would be more important and more valuable. I just don't have great ideas how to pay for it. But
yeah, so Path to Penny, I'll say I think it has been successful in a number of ways. It's available for nearly all Pennsylvanians who are, who file a state income tax return. We continue to get it make it more available for, across all tax vendors who operate in Pennsylvania. I think continuing to get the word out amongst vendors, accountants, people who work with tax filers, and ensuring that when someone makes an appointment, they're talking about Path to Penny and making that optional form Rev 1882 available to their clients. That's something we continue to work with the tax vendors and the Department of Revenue on. I think take up is a little lower than we would like or anticipated. And, I think that's something that, along with kind of the conversion, the unwinding conversion rate, I think there's still kind of like, we feel like we've done a lot on the administrative side, on the system side, to provide access to penny coverage, to enable folks to understand what benefits are available to them in terms of tax credits and cost sharing reductions. And yet, we know that there's still barriers to coverage. So certainly, we know cost is one of them. Definitely want any and all ideas about what other policy initiatives we should pursue in addition to affordability, that could help bring in people and help us get more folks enrolled.
Can I add here? I'm not sure if this is the right place, but the affordability is great, but I don't know like how we're recruiting insurances to participate in the penny, right? Affordability, because I think some of it deductibles can be still pretty steep in penny, and also the familiarity of some of the insurance companies that are coming through pennies. You know, some people are just maybe not familiar, so also becomes a turnaway. Like, I don't know this, and if I don't know this, maybe my provider doesn't take it, so maybe I'm not going to enroll. I didn't know if that was feedback said previously, but I just wanted to throw that out here.
And doesn't that come down to network adequacy issues that we've seen in the past as well? Why am I paying for a plan if I can't even go to the doctor? Like, those are real issues that we see across the Commonwealth as well.
Yeah, certainly. On the provider network side, network adequacy, you know, I think a lot of that is probably under the umbrella of the insurance department. I think there is potentially a role for us, but I think that's generally under the PID umbrella. Certainly cost sharing, and the reason why we're looking at that here is certainly like high deductibles and high copays. You can have a $0 plan, but if you can't afford, if you're never gonna meet your deductible, or you can't afford the copays at the doctors, you're much less likely to enroll and much less likely to use your plan. So certainly, I mean, that's why it's on here. You know, and you all, a lot of you work directly with people who are shopping for coverage, who have these issues, and definitely interested in your perspective on, is it premium? Is it cost sharing? Is it both? In terms of what kind of makes people kind of a little hesitant to enroll.
David, I did want to add this as well. I think there's a lot of conversation around, like you had mentioned, is the plan affordable on a monthly basis? Is it going to be useful if I have it and I'm paying for it? And the question of deductible and high copays and whatnot certainly come into play there. I don't think enough consumers know about the financial assistance programs that are available out there in the market. And I know that's making a left turn and may not feel like it's something related to penny, but if you're under 400% of the federal poverty level, a lot of these consumers are eligible for financial assistance programs through their local hospital. So at the end of the day, this is, again, a consumer education component, but if they're looking at a plan that's what they consider unaffordable because it has a deductible that is outside of their means, and they're not even aware that even though they have that deductible, it's better than being uninsured, and they may be eligible for a financial assistance program in their area in the event of a catastrophic event. Because again, the majority of this population is under 400% FPL. They may not realize that at least having coverage along with some of the other programs that are out there and available to them would help hedge any major claims that they would have along the way. So I think there are other initiatives that we can expand on. I know that CMS has under CMMI, they have an education component that is available for just explaining, to Devin's point, going so far to say, here's how a deductible works and a copay works and whatnot, but expanding on, here are the other resources that round out the health insurance program that you can get through Penny to keep your overall costs lower, I think would be well worth addressing the overall cost to the care beyond just the premium and the perception that there's this high deductible that is unattainable. It's a component of a larger health system that is available, but they may not be aware that it is available to them.
And we've had, I think those are all really great points, and would be interested on whether you think, pulling that through a little bit, people do have a good understanding of what having insurance means, because we have been talking about whether it's worth sort of having this almost like trade-off one pager where it's, if you go uninsured, here are the risks that you take with that, in terms of if you were to get in a accident or have sort of a unexpected illness like that, or and also trying to demonstrate the benefits of sort of getting ongoing care for disease management, or even the free preventive services, which I think a lot of people are not aware of as well. Those types of screenings that people can get to help identify and identify issues before they become much larger, and sort of try to catch them early. Do you have a sense that people are sort of aware that we have been talking about how do we kind of make that more of a constant education and drumbeat with consumers of like, this is what you get, even this is what you get for the monthly premium. This is like, even setting the deductible aside, you're still putting yourself off in a better situation, if you were to get injured because of the financial risk you'd be taking if you didn't have coverage. Do you feel like there's from your experience, a general understanding of those types of trade-offs, or, is the convincing that people need coverage, is that still ground that needs to be tread, or like people kind of understand they need it, but they just aren't able to afford it?
This is Jolene. I'm going to jump in from the hospital perspective. They definitely need education. I will tell you that every hospital has a financial counselor, and everybody who comes in and does not have insurance gets guidance on resources and where to go and what to look for. They do not understand. So I would highly encourage you to put that one pager out on why you need coverage, or here's what you have if you have it, and here's what happens if you don't. That is still greatly needed, and we spend a lot of time with consumers on that.
That's very helpful. Thank you.
Yeah, that's so we just for a plug at a current initiative, we have what we're calling the Plan Quality and Consumer Choice Initiative, and it's an external work group to talk about these types of issues, and our next meeting is about health literacy and helping enrollees understand what to how to use their plans and how to maximize the benefits that they've signed up for. I think certainly there is, out of that can also come a general health literacy initiative, so that people who are uninsured, better understand why they should be covered, even if some of the customer, like even if some of the cost numbers seem like, whoa, like $5,000 deductible, $4,000 deductible, $50 copay. They seem so large, but like in the context of what happens if you have a chronic illness or you break your arm, it's much, having that context would probably be very helpful. So I really appreciate this discussion. I think one of maybe more of a universal question is, I think as we get into our fourth year, we're in our fourth open enrollment, as we look to continue to mature our organization, what role do you see Penny playing in the overall health coverage landscape in Pennsylvania, in terms of making it more affordable and accessible?
I would love to see, as Penny has matured and gotten its feet on the ground and solidified, moving toward making Medicaid assessments determinations rather than assessments. Sorry, misspoke. To be another door through which people can enter to get Medicaid. I think you guys do terrific job of making your website user friendly. I think I'd love to be able to promote Penny as a door into Medicaid. Yeah, is that something that's sort of on the horizon, something you think about?
I don't think that's been a conversation of late, so I appreciate you raising it, because I think there are a lot of challenges with that, but also a lot of benefits. So, I think that's a helpful one to point out. I think especially, when looking at some of the other states that have more integrated systems with the unwinding, it does seem like there are some, where there are determinations and there's sort of less separation between the two systems. It does seem like there's some clear benefits there. But it hasn't been sort of top of discussion recently. So I do appreciate you bringing it up.
All right.
Have
Well,
a quick- Can I just ask one quick question on that health literacy work group? Is that something we'll be invited to participate in, or is that a separate group?
So that's that's a group that we set up with that's happening now. So we've been, we have all of our medical carriers, and then we have a sister broker and consumer advocate representatives there. So we have that group, but those are questions that this working group is exploring, and we're looking forward to taking their input and sharing it with our stakeholder groups to continue to move the conversation forward.
And I think that would be something we would be bringing to this group as well next year, once we we're sort of in idea collection mode right now. And then once we, start developing that into a package of options of sort of addressing, I think that'd be a great discussion for this group in early 2024.
Thank you.
It does look like we're at time. Just two quick responses to some of the questions in the chat that we didn't talk about. Josh, you had a question on demographics of the uninsured population. So I wanted to highlight that we did publish a health equity report. It's Pennies First, and we can share that around with this group after the call to make sure you have the link. It really gets into very detailed demographics and statistics by rating area of who's uninsured, who's insured, and what are some of the characteristics of plans they're enrolling in. So that's a really great resource if you all haven't seen that already. And then to the point about advertising, we are, still committed to putting a lot of effort behind advertising. We've put out more than we typically do for an SEP period during the unwinding, and we are sort of ramping up efforts during open enrollment. A lot of that's focused in December and January, around sort of closer to the deadlines when we know consumers are paying more attention. So you should be seeing more of that as the weeks come. But thank you everyone for the meeting today. And I think Karen, if you want to close this out.
Absolutely. Devin, thank you so much. And Ben and David for all of the great information, and everybody else for the fantastic conversation. I truly appreciate the questions and commitment to Penny and its and the efforts. At this time, I will take a motion to adjourn the meeting of the Pennsylvania Health Insurance Exchange Authority Advisory Council.
I so move.
I'll
Do we know who was the second?
Gloria Velasquez.
All right, thank you, Gloria. Any further discussion? All in favor of adjourning, say aye.
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 Thank you all. Have a great day. Have a wonderful holiday, and we'll see you again in the new year.
Great, thank you.
Thank you. You too.